Well, hi, it's that time of the week again, and it's time for today's weekly update. I'm going to try and do it in under 10 minutes today because long videos are kind of boring, and I'll try and say everything as succinctly and clearly and as tersely as possible so that you can get the gist of the information super fast without having to wade through hours of video. So there might be a little bit of noise in the background. There are some visitors around at our place, so please forgive me if that's annoying to you, but it shouldn't be too bad. Right, let's have a look at the NASDAQ. NASDAQ, we're stuck right in the middle of a range. We've taken some really good trades on this over the last week or so. But right now, I'm out of the market. I was long for most of this last 2 weeks and taking profits at the top of each rally. And we did the same thing during last week. So we're at the top of this channel right now. I don't know whether we're going to be moving higher or whether we're going to be moving lower from here. We're in the middle of this range. If we're in a bull market rally, we'll probably move higher up to test 12,900. But if we're in a bear market rally, we might just fail at this channel line top and then move down to test the bottom of the channel line and then move down towards this year's lows and perhaps even lower down to potentially 10,500, 10,000, 9.5, maybe even 9,000. So my strategy is to sell into rallies. You can see the 100-day moving averages here. The previous very long-term, well, at least this year, support and resistance. It was support there, resistance here. It's a very key level. This could be the separation between a bull market and a bear market. We don't know what's going to happen, but certainly there will be a reaction off there, which is worth trading at least just for a small move down. So my strategy, sell 12,900, buy it around 11,000, being willing to buy it dips further down. So my longer term view on this market is bullish, but I'm not sure if it's going to be just yet. So that's the NASDAQ. Gold, fantastic trading last week. We bought right at the bottom here at 1685, 1,685. We broke up through that trend line. We had a fantastic bullish candlestick closing right at the highs of the day. Bullish outside candle, even better. And I'm holding my position long. We were actually long at 1,700 and 1,735 as well. I've closed both of those trades for a small profit, but I've kept my main trade from 1685, looking for a rally up to here, 1745, and then up to the trend line, and more importantly, the support just under 1,800. And then I'll decide what to do thereafter. You can see that we've got resistance levels stacked up above us, so we want to be cognizant of the fact that we may see another move down once we reach up there. But for now, well, we're well in the profit from this. Literally bought right at the very bottom, which was fantastic. It was an obvious level. I'm not going to go into all the analysis right now, but it was an obvious level to buy if you go back further to the left here. And well, this could be the separation between a resumption of this bear trend, and this line here could be the separation between where we are now and the resumption of an uptrend. So very important for gold at the moment. We're stuck in this range. I think we'll test the top of the range, and then we'll see what happens thereafter. So I'm very pleased. That was my favorite trade last week. Just going across the top here, natural gas. Well, I'm short on this, as you'll know, from $8. I've got, that's the 61.8% fib. I've got another order in to sell a little bit more, in fact, a bit bigger than this size, a bit more size at the 78.6% fib. That's at $8.70. And then we may even get a test of $9 and perhaps even above $10. I don't think so, but it's possible. I structured this trade so that my bigger orders are in higher up. And I know it's contrarian and it's a little bit weird, particularly with gas supply problems and gas stocks in the US being very low at the moment, and all the news and all the sites and everything else that you look at, all the economists are saying gas prices are going much higher. I don't think so. I think gas out prices are going lower. So that's my trade on that one. Euro, again, we're stuck in the middle of a range. We bounced off the parity level, this red line at the bottom. We haven't reached resistance level yet, which is this red line at the top. And you can see we're stuck in between this broadly defined range, the two red lines. We're also stuck in this narrowly defined range between the green line and the black line. We haven't managed to close above the 20-day moving average. But overall, this last consolidation pattern during the week looks pretty good, looks pretty solid. Whether we're going to move lower and test these lows, I don't know. If we do, I'll be buying more down there. If we move higher and test these highs around this red line, which is about 1.0350, I'll be looking to sell. So once again, I'm going to be playing this range from the extremities. That's how I like to trade, from extremities, not from middle bits. The middle range has a higher probability of failure, higher risk, and generally more uncertainty attached to it. But when you trade from extremities, like these two red lines, the extreme range, the bigger range, the broader range, that's when you can get better trades with higher probability, much less risk, and much higher chance of success. So that's my sell zone, 1.0350. My buy zone is back down near parity. Where we'll go this week is anyone's guess. A lot will depend on the interest rates coming out. As I said, whether we get 75 basis points or 100 basis points, whether the market is priced in 100 or priced in 75, it's anyone's guess. Don't let anyone tell you that they know what's going to happen, because they don't. We kind of know that the interest rate will that's on Wednesday, by the way, that announcement late on Wednesday. We know it's going to be somewhere around 0.75 or 1%. Which one, I don't know, and whether the market's priced it in or not, I don't know. But that will affect the NASDAQ. It'll affect gold. It'll affect euro, the pound, the dollar, yen, all that sort of thing. So that's going to be the key number for the week. It's the same situation for the pound. We're stuck in the middle of this broader range. This broader range I should actually define by changing the color of these trend lines to make it like the euro. So we'll use red for the broader range. That's here. Let me just quickly change this so it's easier to read and define for those of you who are watching. So there's the broader range, the red lines that I've just changed color. That's the top of the range at 1.2180. The bottom of the range is at 1.1760. We're slap bang in the middle. We're in the middle of this smaller range as well, between 1.2050 and 1.1850 roughly. So we're in the middle of the smaller range. We're in the middle of the broader range, which means no-go zone for trading as far as I'm concerned. I think we'll test up first and then maybe move down, or we're going to test up and move higher. But I think the first move will be up. Yeah, it's not looking as bullish as the euro in terms of the shorter-term scenario. Whether we're going to break this range through the top or through the bottom, I really don't know. But this week it will break, that's for sure. We're not going to stay in this consolidation pattern for yet another week. So that's the pound. So trade from those extremities, the red line, same as the euro on the left here. Very similar scenario. The euro looks a bit more bullish than the pound. We'll have to see what happens. Having said that, let me just quickly go back to the pound. Don't want to go more than 10 minutes on this video. This candle here is pretty interesting, this dragonfly doji, because that's just a resumption pattern. It doesn't mean anything really, apart from we're probably just going to carry on in the same way that the market was going before this doji formation. And you can see the day before, so that was Friday, the day before Thursday, was a nice bullish hammer candle pattern. So this dragonfly doji probably means we're going to resume what was going on Thursday, which was moving up. So I wouldn't be selling this, that's for sure. I'm also not going to be buying it, but I will be selling higher up. So that's the pound. Dollar yen, fantastic trade. We've been holding this one for a long time, a couple of weeks, not quite 2 weeks, but approaching 2 weeks. We finally broke down through this short-term trend line that we've been looking at for a long time. We finally broke down through the 20-period moving average. This is a day chart. All of these are day charts. Last time we were below the 20-period moving average was at the beginning of June. So coming on for 2 months now that we haven't been below there. Targets, these red lines, pretty simple to define, 134.50, 131.50. This one being the main one, of course, because it was previous resistance, it was support, and it's a much bigger level than this little one here. We might bounce off there briefly. We'll get down to this one probably, 131.50. That'll be the area to exit shorts. I'm short at the moment with a decent sized position, which is in the money now, and I'm going to decide what to do during the week about moving my stops to break even and that sort of thing. But I'm hoping for a move down to 134.50 and really with a bit of luck 131.50, which will be a real month-end bonus trade for me. It'll be fantastic. The other trade that we're looking at or have been trading is the Canadian dollar against the Japanese yen. And go and have a look on my webpage on Twitter. I've made some comments of this. Just so this is my trade of the week. We sold right at the top here. That's why I put the circle there. And we got out right at the bottom here. Fantastic trade. Just so happened that one of my followers on Twitter pointed this out to me and said, "What do you think about selling?" When he said it, the chart looked like this. It looked bullish, completely bullish. Right there, that's how the chart looked when he said, "What do you think?" And I said, "Well, I don't know, let me have a look." The moment I opened up, I sold immediately. Before I even replied to him on Twitter, I sold a decent sized position. The next day, we just moved up. We had a reversal candle pattern. And then Friday, and then Thursday, a little move down. Was looking pretty hopeful. And then Friday, a massive move down to this trend line. I closed my positions at the trend line. I'm expecting a bounce up to perhaps 106, maybe 106.50. I'll be looking to sell into those levels early next week, perhaps Monday or Tuesday, and then for a move down to these support levels at 103.20 or so, and then 102. So that's my strategy on Canadian dollar, Japanese yen. It's a pair that I hardly ever trade, but thank you very much for the gentleman that pointed that out to me on Twitter. It was very, very beneficial, and I think we both benefited because he wanted some confirmation about whether this was going to actually reverse and go down, and I thought very firmly that it would. And I think really that's it. I'm not going to look at S&P. We've covered. Oh, Euro Yen. Okay, this one. Some people ask me about the Euro Yen all the time. Look, if you have a look at this currency since April this year, we've been having very extreme ranges, meandering, choppy. We've got higher highs, and then we've got lower lows. No real trend definition there. Then again, we get a higher high. Now we've got a lower low again. Now we've got a lower high. So all in all, I don't know. I don't think this is worth trading, to be honest. I think generally, if I look at it, I think it's probably going to go down because we're not going to see as much strength in the euro as we are going to see strength in the yen. So I think we're going to see this move down. Support levels are pretty clear. 138.80. That's 136.80. But more importantly, down here at 132.80, 135-ish. So if you are going to be trading this, look for these double green lines down here as support levels. If you really, really must trade this, then look for little intraday rallies up to maybe 140, 139.50, 140. Try and sell into those rallies on a retracement, which we might get actually on at the start of the Asian session in a few hours' time. And then look to sell into those for a move down to some of these support levels. Well, that's it, I think. And, well, I hope that was under 10 minutes. I don't know. Probably not. It might be 12. Have a great week. And for those of you who follow me on Twitter, I'll see you there. For those of you who are members and subscribers to my YouTube channel, I'll catch you there. If you're not a subscriber on YouTube, please go and subscribe, like, hit the notification bell. If you're not a follower on Twitter, follow me on Twitter and hit the notification bell there as well, because you'll get all my intraday alerts, and I send out quite a lot every single day. I send out trade ideas and positions that I'm in on Twitter, and you can get that straight to your email and straight to your telephone. And if you're not a member of ArcisFX, go and have a look at my website. It's ArcisFX.com for more info there. Take care. Have a wonderful week.